con call that has happened as well. And Anushi Johnson with the key details of what is the standout when it comes to these numbers. Anushi.
So now if you have to look at ABB's numbers over here, quite a beat on margins, as you've mentioned, revenue about 28% of growth, which was mainly led by its process automation and electrification business. But it's the EBITDA which stands out, 98% of growth over here, margins moving up to 18% compared to 11% here. A couple of reasons that we have seen as to why this margin boost is happening. First, the company in its con call reported that its material costs have gone down below the 60% level, which has not happened before. Again, we have to notice that the orders that took place last year, they had a higher share of raw material cost included in, which has supported this kind of growth we are looking at. Again, another aspect is the higher share of the automation business, which has supported this, and even higher exports, wherein the margins are comparatively better. So again, that is to be focused over here. Another area, apart from that they have mentioned going forward in the con call, which was important, is the growing significance of their data centers, where they're going to be doubling down their efforts over here. Focus areas, again, see about a 15% of growth going forward. And even if you have to look at electrification motion, that would be on a sweeter spot owing to the building and infra theme that is playing out. Now, if you look at the order backlog, that has seen about a 15.8% of uptick in the orders, while the order backlog about 25% growth. So 40% of the orders that we are looking at in the backlog, that comes from their long-term projects, which are in the railway and process automation business. Now, regarding these, earlier in the day we had discussed, but just to reiterate that, now a couple of brokerages having a strong buy over here. Motilal seeing about a 18% target, with the EBITDA having, with its EBITDA margin at an all-time high. Again, margins were led by the superior product mix as discussed earlier. Even Jefferies see about a 27% of an uptick, with EBITDA seeing no one-offs this quarter. Again, renewables, we have to look at order inflows, which are supposed to be having a higher growth pickup in the H2 of next year. Again, renewables is like a moderate growth area compared to a high growth area, so that remains on watch out. So these are the couple of reasons as to why ABB India is buzzing in trade today.
Okay, ABB is buzzing, no doubt about it. Jefferies has also retained a buy. Pankaj Pandey, ABB looking rock solid to you too?
Well, yes, I think ABB, nothing much to complain. I think 18% kind of a margin was definitely a surprise. And even management commentary that they are going to maintain margins about 12% as quite conservative. I think that's the only challenge with ABB has been it's very difficult to sort of justify a stock like this. It's becoming a concept stock. So even we are taking margins of 17%. The stock is trading at 90 times or so. So it's very difficult to sort of justify a buy. But like I said, it is one of the companies which nobody wants to sell, and everyone, whosoever wants to sort of have an exposure on the capital goods or capital expenditure theme, I think this is one of the prominent stocks to sort of play. So if somebody already has it, I think they should hold. I am not too sure when it will sort of correct sufficiently enough for us to give a buy.